I am the sales manager at Financial Brokerage. Thank you for joining us this morning. Today we have Michael from, is it Prase? Is that how you say your last name, Michael? I'm sorry if I botched that. We have Michael.
No, you're doing just fine.
Okay. We have Michael with Mutual of Omaha here this morning, and he's going to have a really interesting webinar. And as agents, we're going to go over 21 questions that you need to ask your client to uncover disability opportunity as well as any other opportunity within your client. But I'm really excited about this morning's webinar, and I'm turning it over to you, Mike. Go ahead.
Very good. Thank you so much, Michelle and Leonard. And so, again, my name is Michael. The last name is Prothy, and both vowels are long. I'm with Mutual of Omaha. Nope, you're all good. You were close to it. And as indicated, the screen that you see right there is the most lucrative financial services product. And right off the bat, those of you on the call might be scratching your head thinking, how is that possible? How is anything that has to do with disability income protection the most lucrative financial services product? And the reason I make that type of a statement, and I didn't make that exclamation, that came from a coach that I work with, and Chris and I have talked about that, and he clearly indicates that in the world of financial services, mutual funds, med sup, long-term care, life insurance, IRA rollovers, 401k, whatever it might be, we can make a clear and concise case for the disability income protection world as being the most lucrative financial services product. And one of the reasons is because no one is in this particular space. If you want to be in an area of which you can do the best thing for your client and be financially rewarded, then why not be in a space of which no one else is talking? And I always ask individuals to think about the July 4th weekend. And in July 4th weekend, you and your family, you're wanting to go to the pool. And you're thinking, okay, everybody's going to be wanting to go to the pool because it's hot. And, well, do I need to go to the public pool? And I don't know what it's like in your particular community, but my community here within the greater KC metro area, July 4th happens to be a free day. So all members of the community with a Prairie Village mailing address get to go to the community pool for free. So it's not very nice. It's not very comfortable. All the chairs are taken. The pool is packed. You don't get to really swim, play with your kids, that type of thing. Or you want to go to the private pool. Do you want to go to the private pool, whether it's a resort, whether it's a country club, whatever it might be, where there's not that many people there? So which pool do you want to swim in? The one that's massive crowds or the one that doesn't have very many people in it? And that's the distinction we want to talk about today. From a disability income, critical illness, lump sum types of products, Mutual of Omaha is one of those carriers that you have access to. And so the 21 questions to ask are simply, what are the questions that need to be going through your head and potentially to those prospects and clients that you already have when it comes to having this conversation? And I have stated many times that the idea is that we don't need more prospects, because anybody that's in this audience or those individuals of which you're calling upon, you're likely calling upon people that have an income. And that income is going to be important to them because that is what's helping their family have a healthy financial life. And if they were to lose that income, then that's where it's going to create chaos, financial stress, anxiety, uncertainty. You have the power as an advisor, as an agent, to protect them from those things of which we know can happen because we don't get to pick and choose when those events take place. So that's a little overview of what we're going to be talking about. There's going to be plenty of time for questions, answers, and the like. And the next slide that we've got here, this is just simply my contact information and that of my internal support person, Michael Prothy. That number that you have there, the 913-488-1532, that is my cell phone. I operate out of Kansas City, but I travel across the country, and that phone is with me all the time and on way too often. So you are more than welcome to text me, email me, or call me with any questions you might have. Of course, you have a great resource within financial brokerage, and if you've got questions, you're more than welcome to start with them. If you want to go direct to us, again, either myself or Kyle Cooper. Kyle is great. He knows a lot of information on how to navigate within the walls of Mutual of Omaha. So that will be a good place to start. So right off the bat, what's the best income protection plan? And this is a question that you could ask yourself, because I always challenge each advisor, agent, broker to, what's the best income protection plan for you? Are you adequately covered? We have a couple of options here. Hope that nothing happens. Well, okay, wish upon a star. Consider yourself bulletproof and invisible. I just turned 46. Of course, I don't have a feeling of being bulletproof and invisible near as much as I did when I'm 30, but I'm sure that my wife, my children, those around me might still say that I'm a little bit dense, a little bit challenging, but that's still just the nature of our existence as a guy, I think. Or finally, trust that nothing will keep you from being able to work. Because I don't know about you, but I have oftentimes had individuals say, no, you know what, if I can't do what I'm doing today, there's nothing that's going to keep me from doing that. Now, as I indicated, unfortunately, we don't get to pick and choose those events, the illness or circumstances that we may experience during the course of our lifetime. So now, what's the best income protection plan? The insurance that is owned and enforced when the event occurs that will pay you if you're not able to work. Now, you could take that and apply it to any line of insurance protection, because you are in the business of protection management, risk management from a insurance perspective. You hear people who manage assets, the air quote, financial planners of the world. Those individuals, yes, they are doing assets under management, but they're doing risk diversification of investment choices. They have Morningstar charts. They have pies of diversification. We're talking about protection planning with insurance products, whether that is as a result of a cancer stroke heart diagnosis, a critical illness diagnosis, a short-term disability, a long-term disability. These are the types of things that you could equate to both life insurance and long-term care insurance, because what's the best insurance plan? The one that's in force at the time of which you need it. Home, auto, any of those types of things. You apply this to where you want. And that's the part where we have a great opportunity to do a wonderful service to those clients and prospects that we're working with, to ask them the question of which likely keeps them awake most at night, which is, what if I didn't have a job? Now, whether I didn't have a job was most recently made or brought to our attention about the idea of unemployment. Well, the likelihood that it's an unemployment issue, it pales in comparison with, well, what if I'm not able to work due to an accident or illness? Or what if I don't have enough money in the event of a diagnosis of cancer, stroke, or a heart attack? Because, again, we don't get to pick the timing of these events, but wouldn't it be great that you as the broker, advisor, agent, the trusted insurance professional, was able to know, I asked my client that very question. I made sure that they started the thought process when it comes to this. I don't know what is going to be their trigger, but I do know that I took the first steps necessary to start engaging in that conversation. So that's really the foundation of what we're going to be talking about here. Now, the 21 questions to ask. Again, you heard me say a couple of times already that I have been asked many times, Michael, we need more leads programs. We need more prospects. Well, I simply ask you to consider the first question. How many of the people you meet with each week rely on their earned paycheck to meet the financial needs of supporting themselves or their family? Right there, you've identified 95% of the population, in my opinion, who needs to have this conversation. Whether or not they want to admit to needing it, or whether they think that they're bulletproof and invisible, or that nothing's going to happen to them, they need to have this conversation. And that's where you, as that trusted advisor, the insurance broker, question number 2, how would you feel as their trusted advisor or insurance broker if your favorite client was not able to support his or her family due to a prolonged illness or accident? And I've come to the conclusion that it might not even be a prolonged illness or accident. It might simply be an accident, or it might be an illness, an identifier from that perspective. I was working with a particular RIA, an assets under management firm, one of the top 5 in the country. And these individuals have a minimum investment of $1 million. In order to work with this particular company, you have to meet them with $1 million of investable assets. And my question and my challenge to each one of them was, You work and operate with the best of the best, the most affluent individuals in the country. And how would you feel as that assets under management, as that financial broker, as that advisor? How would you feel if that person was your next door neighbor and your kids are friends and your kids go to the same private school and they play club soccer and they're in dance together? And then as a result of something that you did not ask them about happened, they weren't able to continue to work in their job. They weren't able to continue to have resources available to them. And they therefore needed to sell the home, move neighborhoods, and again, picture whatever event you want this to be applicable. The most often one is what happens if life insurance is not in place. The one that you don't read about, though, is what if the individual has a diagnosis and is not able to do their job as an attorney, as a physician, as an electrician, as a plumber, because we all know the millionaire next door concept. So these individuals, they rely on their income. They have not yet reached financial independence. So how would you feel as that trusted advisor, insurance broker, financial planner, if you don't ask these questions and you think, what if I would have asked? So that's the first part of this, and again, we'll keep coming back to this. But these are all questions that I want to stimulate your way of thinking and think through what options may be available to advance. May or may not be the carrier of which I represent, which is Mutual of Omaha. I know that we will earn our fair share of business when it comes to disability income protection, lump sum options, critical illness. Again, I just want the conversation to start happening more often and on a more frequent basis. So number 3, why do I need disability insurance protection? And I was recently with an individual in the Pacific Northwest, and he said, you know what, Michael? He goes, I meet with each of my clients, and I lay out on the table the 3 disability income protection policies that I have in force on myself. And I say, this is why I believe that this is important, because I own it. Very compelling. I don't know that I have, I never did that as an individual, but I knew that I could say with great honesty, yes, I have disability income protection, both through my employer and individual policies in place. And I believe that I have the maximum protection available to take care of my family if in the event something were to happen to me. And my pause and my thought for you is, can you do the same? And if you can't, I'm more than happy to have that conversation with you. And I'm happy to just talk with it through what is your own personal income protection plan. Because we've known, it doesn't matter how long you've been in the industry, we know that you can represent and sell those items of which you own a lot better and a lot more effective than when you don't have it. So if you don't believe in it for yourself, we might just end the conversation right there. And that's not right. We need to own it, we need to know about it, and we need to love it, live it, shout it from the mountaintop when it comes to this area. That's why I need disability insurance protection, not just for your own family, but for the way you're going to represent yourself in the market today. Number 4, we always fall back on this when I say we. A number of individuals will fall back on, doesn't the government provide me with disability insurance? You know what? There is a program through the Social Security Disability Administration Program, and anybody that knows about it, may or may not have good experiences with it from the filing and from the appeal process. And even if you are all successful, and again, I don't have any problem with the idea of going through that process, but what I challenge individuals with is, do you know what the average payment to a person is who is on claim from the Social Security Administration? And the average is going to be just under $1,000. Now, just under $1,000, $12,000 a year, who within the clientele of which you're seeking or pursuing a business relationship with are you aspiring to have earnings of $12,000 a year? No. Your clients that you're pursuing, your prospects, you're looking for them to be able to earn an income. Maybe it's $25,000, $30,000, $40,000, $50,000. What we refer to as that middle market space where we work really well. That's an area of which even if they're earning $40,000 or $50,000, is $1,000 going to be enough for them? Probably not. That's where you have the opportunity as a trusted advisor, as a risk management professional, to be able to say, you know what, we have an opportunity to make up the gap. we have an opportunity to make sure that you have enough income in place so that it would create financial certainty and reduce the stress that may be incurred. And it might be on a monthly basis, or, as we'll talk in a little bit, it could very well be from a lump sum product, from a diagnosis perspective. So the government does provide disability insurance. It's not, however, something I'm going to rely on. And even if I were going to rely on it, there's still an upside opportunity for you to provide some gap. What are my chances of becoming disabled? Now what are my chances of becoming disabled? I've not ever been a big fan or advocate of using percentages because, I've heard that the average long-term care stay is 2.5 years. Well, why is that? Well, because men stay in there for maybe 1.5, and women stay in there for 5, and so that's where I get my average. I don't know. I like to think that everybody that I work with and everybody that I talk to, they're exceptional, not just average. And so what are my chances of becoming disabled? We can talk about, well, you have a 75% chance of becoming disabled prior to age 65, more so than you do dying. I don't know. Is anybody going to want, bang on your door and go, wow, I just heard this new statistic? If you want to look at some statistics that are out there, I've provided you with a website, disabilitycanhappen.org. I encourage everyone to go to that website and just look at the resources that are out there and available. The disabilitycanhappen.org is a partner with the lifehappens.org, the Life Insurance Foundation, and this is the disability side of things. And this is something that is sponsored by the carriers in the disability income protection space. And I just encourage and recommend that everybody goes out and take a look at this, because if you're in a multimedia, social media type of a venue, they have things that you can put on your Twitter account, that you can post to Facebook, that you can use from a LinkedIn perspective. A great set of resources, and it's not labeled with any particular carrier. So what are the chances of becoming disabled? It's one of those things that I don't know that it's appropriate or effective to sell from, because the idea when you're watching your nightly news, you might hear about the horrible car crash that took a person's life on the highway, but what you don't hear is the person that was in the other car, of which might have become disabled, and they're not able to do the material and substantial duties of their occupation, and therefore they're going to be out of work for the next 12 to 18 months recovering. That doesn't make the nightly news. That's the part where you're going to be in a place of which you can help protect for that. Just a follow-up to this. How much disability insurance can I get? And again, number 7, it's more of the tie-in. It's more important to say, how much do I need? Because each one of us would love to say, yes, I want a tricked-out Cadillac. I want all the bells and whistles. I want the maximum amount of income that is available and eligible to me. In saying that, that's where there's a rule of thumb out there, and I'll just use the income level of $100,000. At some point along the line, some academic study, some magazine, somebody in the industry said, oh, you need to see if you can get 60% of your income replaced, or 70%. So 60 to 70% is an industry average that we see or that we hear about, which is true. From a proportionate amount, if we want there to be a motivation to go back to work, so we're not back in the early 80s where it was nothing more than, oh, well, why would I want to go back to work because I get more from a disability benefit? Those days are long since gone. But if a person's earning $100,000, pretty much across the board, any carrier that you're going to go to, it's going to equate to $5,000 a month of benefit of what you're going to be eligible for. So, of course, that equates to 60%. So that's where you have to start to take into account, how much do I need? How much can I get? I ask individuals to tell me, what's your number? What's the number of which you know that you have within your household as fixed expenses that you would want to make sure are covered if in the event you had a prolonged period of time of which you're not able to work? Is that your mortgage? Is that your health insurance? Is that your car payment? Is that your homeowner's protection? So those are the things that I really encourage individuals to get to, is how much do I need? Maybe the spouse works outside the home. Maybe you own your own business. Maybe it would be able to keep running for a period of time while you're not there. And we have a whole other line of business owner questions to ask. But in terms of how much do I need, that's the more important question of how much disability insurance can I get. But as a rule of thumb, at 100,000, maybe even up to 200,000, that ratio is going to be somewhere between 60 and 65%, as high as 70%. As you get above 200,000, that proportionate amount, that percentage is actually going to decrease. And that has to do with more just insurance carriers having issue and participation limits. So do I need an individual plan if I have it provided by my employer? So my experience has been that if you are doing a fact finder, if you are talking with an individual, and most brokers, most advisors, agents hear the following statement: you do a good job because you ask them, Mr. Prospect, do you have a disability income protection plan through your employer? And they say yes. You immediately sigh a deep sigh of relief and think, oh my gosh, I am so happy to hear that, because now I don't have to ask any more questions, because you know they've got a group plan. I challenge you then to ask a couple more follow-up questions. Is that program provided to you by your employer? Why, yes, it's one of the benefits that I have from my employer. And if that is the case, let's say that they are earning $100,000 and they have a 60% to $5,000 group LTD contract. We have learned that, or we now discover that that is an employer-provided benefit. And if the employer has provided that benefit, they have taken the deduction as a business expense. And if any money is being received due to a claim by the individual, that money is going to be taxable to him or her. So you're not going to get $5,000 a month of benefit. You might net $3,700. So if you're going to get $3,700, you were earning $100,000. Now you thought you were going to get 60%, but now you're really down to about 45%. Are your clients adequately prepared to work or to live on 45% of their pre-disability earnings? I would contend probably not. That's where you have to just ask them the questions. Can I take a look at your plan? Do you mind if we review to make sure that there's enough there to protect you? Do you mind if we take a look at the content of the plan itself? Because many individuals who are in a sales position, let's say they're a manufacturer's rep, a pharmaceutical rep, heck, they could even be an attorney. And I'll use the attorney as an example. That the majority of group LTD plans that are out in the market today, they will say, we'll provide 60% of $5,000 of salary. Well, how many attorneys are operating only on a salary? If they're a partner, they're receiving a K-1 distribution. If they're a sales rep, they receive, let's say they're earning $100,000, but their base contract might be $40,000, and they're earning an additional $60,000 in commissions. And if that's the case, will their group LTD plan provide them a benefit on $100,000 of earnings or on their $40,000 of base benefit? Most will say, we're going to give you 60% of your salary, not of total compensation. So that's where I encourage you just to ask. And you don't have to become an expert in that area of reading group benefits. And why would I recommend that you get a copy of their group benefit plan? Because guess what you're going to learn? You're going to learn whether or not there's an employer-provided LTC program. Is there short-term disability? Is there a critical illness policy? Is there a cancer stroke policy? Is there a life insurance plan that's available? All these things are opportunities for you to, number one, protect your clients even further, but number two, continue to make sales in their best interest. So those are all things of which we want to just encourage you to consider when talking about it from an employer perspective. How much does disability insurance cost? This is where a lot of times you look at a group LTD plan, it's pennies on the dollar. Similar to a health insurance plan. It's pennies on the dollar as compared to going out and buying it on an individual basis. Life insurance, same thing. Pennies on the dollar as compared to going and buying an individual life insurance contract. So how much does it cost? It all depends. And what I encourage individuals to have is not just how much does it cost, but how much are you willing to budget to protect yourself if in the event you're not able to generate an income. And a lot of times within my industry, from a carrier perspective, the carriers all will say, well, my competition is Assurity or Illinois Mutual or MetLife or Principal or Standard or Guardian. And how much does disability insurance cost? I don't really view any of those carriers as my competition when talking about cost. My competition when talking about cost is a cable bill, my ATT UVerse bill, a cell phone bill, technology, an iPad, an iPhone. Those are the competition, because those, a gym membership, anything that's out there is a competition from a cost perspective as compared to a cost perspective from a budget to say there's lots of great carriers out there. We'll design a plan that will fit your needs and provide you potentially with income at the time of which you need it. Your cell phone won't do that. Your ATT verse package won't do that. We, however, have products available that if in the event you need them, they pay. That's what we want to do. So the cost is a legitimate question, but it's more of a turning it back to the client or to the prospect to say, you know what, those things that are best for you and most treasured, probably there is a higher cost to it. Are you willing to engage in that conversation? Yeah, okay, I will. Now, more importantly, the question may be, how much am I willing to spend to protect my most valuable asset? And it's not disability protection, it's paycheck protection. My most valuable asset is my ability to generate an income. I am not yet financially independent, therefore I need to continue to work. Can I get individual disability insurance if I have a current health condition? You know, there might have been 10 years ago where this question would have been, no, you're not going to be able to get it. In today's market, I do believe that there are a handful of items that would exclude you from getting coverage, but in all likelihood, there are enough carriers in the space, it's a competitive enough space, that I used to say when I was on a GA side of things, that I'll be able to find a square hole to put the round peg. That there are options that are out there, so don't ever just discount it to say, no, nothing's going to be available to you. You know, and I use examples of diabetes. It used to be that adult onset diabetes was an automatic decline. And today there are carriers in the space that would say, yes, in fact, we'll be able to get you a policy. Might have a rating, might have a limited benefit period, but a policy could be available. So sometimes we're actually starting to see where health conditions might be just excluded, or there might be a limited benefit period as compared to the rest of the contract. How do I determine my current employer benefits? We talked a little bit about that. Just ask them for the benefits page of their benefits book, or if not, you can always go on to, a lot of times you can go on to a website, or just make a call to the human resources executive with your client, or have them complete a letter of which you have provided to them to say, I'm exploring some outside income protection and life insurance benefits. I'd like to have a clear understanding of what my package is, because we all know that each year at the annual enrollment time, it's a computer screen and they go and they hit a bunch of dots and fill in blanks, and really they may or may not know what they have or what they don't have. If I am eligible or need more protection, how do I get a quote? The one thing that you have available to you is you've got a great resource within financial brokerage, and they have access to a number of different carriers quoting, and this is where they can provide to you a quote request form, a conversation, and so that's an easy one, how to get a quote. Who are good candidates to ask about disability income protection insurance? I go back to one of my earlier statements that says anybody that you're working with who is earning an income and they need that income to support their current standard of living today, guess what? You've got a prospect. You might have just written a life insurance policy. Maybe you did an IRA rollover. Maybe you've got a college education funding set up. You did a dream board. You've done a data gathering, and you've indicated that they want to have continued savings. That person, their income is important to them. And if you are talking with an individual who has a group plan available to them, and it is a taxable plan, you will always have an opportunity for an additional income protection plan, even with a group plan in place. It's just, that's it. What carriers in competition are in the market today? We talked about a little bit about how I define competition. If you look back 20, 25 years, at that time, there were probably over 200 different carriers that were in the disability income protection space. Today, LIMRA is going to track about 25 of them. The nice thing that that has done is that has created a very competitive environment, and that goes back to my point about if you have a health ailment, if you have some sort of medical history, that it's more than likely an opportunity today to find a place to place your business from an income protection place. Why should you incorporate the sale of disability income protection into your daily conversations? Because this is what's going to be, in my opinion, your unique selling proposition. This is what's going to position you in a way of which, when you're competing with an assets under management person or an asset gatherer, as I like to call them. When I was in practice, the idea of my mutual fund will beat your mutual fund really didn't get me any traction. I never picked up any assets under management by saying my mutual fund will beat your mutual fund. Where I had success in gathering assets and picking up new clients was when I would ask, what is it you're going to do if in the event of a premature death? How is your family going to react? Do you have assets that would allow for you to be financially independent today if in the event you were not able to go into work tomorrow? The interesting part about that conversation from a daily perspective is a lot of times business owners are daytime activity. They're great prospects for income protection. And the reason is because their family security is directly tied to the success and security of their business. So if they're not there in their business being able to generate a revenue stream of which they are paying themselves, now you've got a double whammy taking place. And if that business owner says, oh, you know what, my business will continue to run and operate because I have a great manager and a great salesperson. If that's what they say, ask them this question. When was the last time you went on vacation? Wait for that pause, because most business owners don't take vacations. And then you can turn around and say, well, you know what, let's just go ahead and let's book you a 90-day trip to Mexico. Let's go to Cabo. And then we're going to ask you to come back after 90 days. What is the state of your business at that point in time? Boy, that really gets them to start thinking, because now it's a matter of we have a generated income for our family, but now we don't know what kind of state our business will be in. And there now we have an opportunity to talk about disability income protection, but also business planning options, which might include business overhead expense. So these are the types of things that, from a daily perspective, that's the type of conversation that you would want to have. How do I approach my best clients? A lot of times people I hear in the space, they say, well, you know what, Michael, you don't know how long it took me to get this client from an investment perspective. And actually, I'm not going to argue with them. I can say, you know what, that's true. I do have a good understanding of what it took you to get that client from an investment perspective. But I also know that, do you know how long it would take for you to lose that client if in the event they weren't able to work? And I don't mean lose them literally, but where are they going to go get resources if they aren't able to work? Where is the spouse who may have just become a widow going to go get resources if they don't have adequate life insurance or adequate disability income protection? Or maybe they had a diagnosis of a cancer or a stroke or a heart attack issue, and they're looking around saying, we need some additional cash to help pay for what our insurance isn't going to cover. Those are the types of things that, how do I approach my best clients? In my opinion, it's one of the easiest approaches to make, because you're going back to that best client, your favorite client, your family friend, whatever it is that relationship might be, and say, you know what, I'd be remiss as an advisor if I didn't ask you about your income protection plan available through your employer. I would be remiss if I didn't ask you, what plan do you have in place if something were to happen to either you or your wife prior to what you would assume is a long-lived life? I'd be remiss if I didn't ask, has anybody within your family, within your circle of friends, within your business, have they experienced a diagnosis of cancer, stroke, or heart attack? The answer is, the majority of time, yes, I know someone. Your follow-up to that could be, was that an expected diagnosis? Did they expect to get that news? No. No one ever expects that, because remember, we talked about we don't get to pick and choose the events and circumstances which may impact our financial lives. And then your follow-up to that very well could be, and I'd recommend, do you think additional cash, additional income would have been a help to alleviate that financial stress that has now impacted that family? And invariably, it's going to be yes, because if anybody's ever delivered a death benefit check, or if they've ever had the experience of an income protection claim, no spouse, no family member has ever said to me, you know what, Michael, that's way too much. I think I just need to give some of that back. It's, wow, I'm glad I did what I did. If there would have been an opportunity to do more, I would have done it. That's how do I approach my best clients. What is the worst thing that can happen to you when asking one about their greatest fear? We talked about this is an emotional, this is a feeling, this is how would you feel as a broker. But what would be the worst thing that you would experience if you went and asked your best client? I'd be remiss if I didn't ask you about your life insurance plan. Nope, you know what, Michael? I don't want to talk about life insurance. I have it covered by my brother-in-law. I have my best friend do it. Okay, that's great. I just wanted to make sure that I asked about it, because now you've done your due diligence. And what is the worst thing? They can tell you no. And if we're in sales, and we've been in sales for any length of time during our lifetime, I'd much rather have a no than a maybe. Finally, just in wrapping up here, again, this is a follow-up. Do you run a greater risk of losing a client by asking or not asking to offer a solution to a specific need? And again, this is just a sales perspective that I've had experience over the course of my lifetime of, what if I ask them, they tell me no. But what if somebody else comes along, because we all remember the old adage that someone else's best client is my number one prospect. And if a person is looking to gain more affluent clients, well, of course, you're going to want to go look for the places of which you know that they have, why does the person go rob the bank? Because that's where the money is. But you want to go to the areas of which you know they have resources, they have an income. And who do you like to work with? This could be occupation specific, but one thing that I would encourage you to consider is if you're an insurance professional, maybe you don't do any types of assets under management, you don't do 401ks. I would love to have a conversation with you or Leonard. We could follow up with this, Michelle, in terms of what I refer to as being a broker to the broker. So if there's somebody in the community of which you work, and all they do is fee-only investment management, assets under management, because they aren't insurance professionals, in my opinion, who do you like to work with? Go to that person, because they're declaring the fact that they're wildly successful based off the assets under management. What you're going to do is you're going to create a unique selling proposition as an insurance professional that says, you know what, I want to continue to help you, Mr. or Mrs. Assets Under Management person, or fee-only advisor, or RIA. I'm here as an insurance professional to be a trusted resource for you, so that if in the event your client is not able to work due to an accident or illness, it helps protect the assets that you help them accumulate. It helps from an insurance perspective, from a life perspective. It might be a long-term care conversation to have with them. And then the final note there is what is your unique selling proposition? You can wordsmith this as much as you want or as little as you want. When somebody used to ask me, what is it that I do? I would say, I'm a financial advisor. I help people manage their financial livelihoods, and their eyes glaze over. And now I really say, you know what? My role is to create and offer risk protection plans for each person that I meet with, so that they have the choice to make an income available, regardless of the financial circumstances they may face. Because we don't get to pick and choose those events that may impact us from a financial perspective. So I've chosen to focus on the risk protection area. And I work a lot with individuals who are comprehensive financial advisors, those that are individual financial professionals, PNC agents, med sup reps, anything and everything, because my role, I just want to offer them a choice. so that they have the ability to make an informed decision. And if anything were to happen along the lines of an event, what would that be? And I mentioned cancer, stroke, heart attack. Mutual of Omaha has a cancer, stroke, heart attack policy that upon diagnosis would pay. A critical illness policy. We talked about in the headline that Leonard sent out to you, a short-term plan. Maybe it's only 24 months that a person needs to go ahead and make adjustments. And we have a unique opportunity as Mutual of Omaha to represent and have an underwritten individual plan that provides short-term disability. And we can vary that from an elimination period due to accident or illness with the 24 months maximum that's out there. It might be an accident-only plan. Those individuals that are in a mechanic shop. From a mechanic's perspective, we have an advisor, we have a broker that all he does is represent accident only. And he is doing very, very well with that. And then, of course, we have the long-term plan that includes that return of premium rider that Leonard made reference to during the when he sent the invitation out. And that return of premium, when you put that on an illustration, it shows a rate of return of anywhere between 7 and 9%. It increases the cost, but I've seen a lot of people put that into place. So that is a 30,000-foot overview. I've taken about 35, 40 minutes of the time here. And so, Leonard, I'd open it up, or if you'd like, if there's any questions that are out there, or I don't know the next steps, you tell me.
Thank you, Michael. That was great. Such a great presentation, not only for disability, but questions that advisors and agents can ask themselves to uncover any opportunity for that matter with their clients going forward. I am going to unmute it if anyone has any questions.